An hour till the opening bell on Wall Street. Joining us now is Brenda Vingiello, Sandhill Global Advisors Chief Investment Officer. And I guess we sort of saw it coming, Brenda, and that is all the conversations we've had today with people like you that have to do this for a living and decide on things. We're really talking about a stagflation environment. We're trying to figure out how much is the stag and how much is the inflation. And that's what's on your mind. We're going to get CPI this week. The question is, do we fall into a full-blown recession or do we have a soft landing? But that's what we're talking about. Inflation staying high and being an issue, and how much does that cause the Fed to orchestrate what could be a recession? We're right smack dab in the middle of that discussion with everyone we talk to. What do you think?
Yeah, I think you're exactly right. We're in this interesting time in history when demand is still so strong, and that's a big part of the inflation problem, right? The prices are rising and companies and individuals are still paying those higher prices, still demand for goods and services. So I think, one thing that we're thinking of, we do not, our base case is not that we will end up with a recession on our hands. We are seeing some economic slowing already, however. So we've gotten a little bit more defensive in how we're positioning our portfolios. One of the positions we recently added was a position in long-term treasuries, which we have not owned in more than a decade. But we think that a lot of the damage is done in terms of rates rising at the long end of the curve, and would expect that we might have more inversion. But we really like the protection that treasuries provide, particularly in an either slow growth environment or in a recessionary environment. And the price of long-term treasuries are down 20% this year. So we think there is an opportunity there. We funded that by trimming some of our commodities position. Still think there's a good reason to own commodities, but also recognize that in a global economic slowdown, we are going to see some of the froth likely come out of those prices. And we started to see that a little bit last month. But that's also an important part of this equation of bringing inflation down.
Yeah. Does high yield, does the creditworthiness risk offset the higher yields? It sounds like you think that maybe fixed income is a place to go, but you think it's a place to go because of I guess, a slowdown, a business slowdown. So then you'd have to worry about high yield.
Right. And I think obviously in a recession scenario, we don't want to own high yield where there is suddenly more credit risk. That's, really principally our reason for adding the treasury position here, given the safety that those provide. Yeah. But I do think for the first time in a couple of years, bonds are looking more interesting. Certainly more interesting than they were a year and a half ago or so. So we think that certainly bodes well for a more diversified portfolio in this sort of environment.
Brenda, did the jobs number on Friday make you bullish or less bullish? Because it shows resiliency in the labor market, but it also shows persistently high, maybe labor inflation. So how did you take it?
Yes, well, in our view, we just don't think we're going to have a recession when we have a job market that's as strong as it is and consumers with balance sheets as strong as they are. But you're absolutely correct that herein lies the problem, that the job market is just too strong, and that's adding to the inflationary pressure we're feeling. So it needs to soften. We haven't seen that happen yet. But for that very reason, we don't expect that we're going to see a recession in the near term, just given that strength that we're seeing in the job market. We think that is key. Certainly, if we were to see a significant slowdown there, then that may change our minds, and that's not what we want. But I think we need to see some slowing, certainly, to help facilitate the Federal Reserve's agenda of slowing the economy a little bit and taking off some of that inflationary pressure on the wage side.
All right, we're going to end it there. Brenda, thanks.